I would like to start with how you actually got started doing what you're doing now, because you're buying and selling businesses, you're an advisor and investor, but you didn't start out like that. So you actually started with a telecommunications company and it kind of developed itself, right? It happened by accident almost.
Yeah, I think like everybody's career, you have a big plan for what you think you're going to do, and then where you end up is somewhere completely different. You know, if you asked your 12-year-old self, would you be doing what you're doing right now? They'd probably, fall off the chair laughing. Yeah, I mean, everybody's path is interesting and varied, and there's an awful lot of luck and coincidence and hard work and bloodshed that goes along the way. But I actually started when I was 14. I was a market trader. I was selling watches and jewelry on a market stall every weekend, and to anyone that would buy them at school as well. I actually left school at 15 to pursue the business of trading. I was trading amusement machines at that time, and then I ended up getting an amusement arcade, which went bust. Basically, I screwed it up. That was also, a good lesson in humility, because I hadn't actually, I think I was about probably 18 or 19 then, and actually nothing I'd done in business had not worked. I'd always managed to make everything kind of work. And that's quite unusual in my experience, because everything in business generally doesn't work first. And then you eventually figure out how to make it work. So it was a really good kick in the nuts. It was a good dose of humility at a young age to, kind of lose everything, I have to go tail between my legs back to my parents. I'd moved out of my parents when I was 17, cocky and full of myself, and then had to kind of crawl back and go, oh, you've got somewhere to stay. That I think was a healthy thing to do. But yeah, in terms of where I am now, so I started a telecoms company when I was about 19. I started with 50 quid. So I had a choice, like what was the most important thing to buy, and I bought business cards, which I guess you just wouldn't do nowadays, but that was more than 20 years ago. And just went out networking and tried to sell people phones. And then when you sell people phones, you have to figure out how you buy the phones and fulfill the orders and all of that. Joy. And anyway, that grew into a kind of £1 million telecoms company in about 2 to 3 years of startup, but was always massively undercapitalized. It was always hand to mouth, bootstrapped type of business. And then telecoms is just really acquisitive. So there are always people trying to buy your business. And that was kind of my first education in buying businesses, was sitting on the other side of the table, effectively being pitched, because this is something I always tell people when I'm talking about this topic, is everybody thinks of M&A as kind of a procurement process. It's all about analysis and sucking your teeth and hard negotiation and, walls of advisors in a room, hammering out a deal. It's really not. It's a sales process between two people, the owner and the vendor and the buyer. So it's just like selling a watch on that market stall or selling a telephone system to a company. You're kind of pitching them on doing a deal with you. So I was on the receiving end of a lot of those pitches. And interestingly, the thing that most of them had in common was that the deal structure was really appealing, but didn't involve giving me much money up front. So I kind of just took the view of, look, fuck it, I haven't got any money either. Maybe I should be the buyer instead of the seller. And just went out networking in a different way. So I went out talking about buying businesses instead of talking about buying telephones. And that was a huge education in itself. So when you walk into a room full of people as an entrepreneur, quite often you're not really an entrepreneur, you're a glorified salesperson that's just trying to get more of your product out there. When you go into the room and you have this kind of strategic conversation about how you want to grow your business by acquisition, everybody takes you way more seriously. Even though I was like a 21-year-old or something like this that probably didn't make a lot of sense, was very green. I was always too young in the room. People would always listen to the grey-haired dude who'd spent 50 years working in a bank and had no business experience, and would ignore me with the 10 years of business experience I had at that time, and that was always really, really frustrating. But having that more strategic conversation, which is, look, I'm running a telecoms company, I'm looking to buy other telecoms companies, all of a sudden I thought, fuck, this kid might actually be a little bit serious. He's not just trying to sell me telephones. And that opening line, I guess, just going in and talking about something that was not so much, sales sharky behavior, opened loads of other doors for me. I ended up doing a deal because of that, but actually we ended up doing a massive contract with Costco, the big trade warehouse people. And we only did that off the back of being able to have that kind of more strategic conversation with the CEO of Costco. If I just bowled up to him and said, how much do you spend on your telephones? It would have been a 3-minute conversation if I'm lucky. But it turned into a fantastic multi-million-pound relationship where we had stores within stores in Costco in the UK. what you say in that first, the answer to that question, what do you do? The way you answer that can be pretty powerful.
Yeah, definitely. So I can definitely imagine that a lot of people didn't take you seriously in the beginning because, yeah, you were 21 and you're talking about buying companies. So that's really young for that in that industry, probably in the industry of buying and selling businesses, right? So what would you say are the skills that are most important for something like that? Because the first thing that pops up in my mind is, oh, you need to be a deal maker, you need to be a persuader, you need to be good at, and you need to enjoy looking at numbers. But I think there's actually a big component of people skills that are way more important. So what do you think is the
Yeah.
most important skill, or like where do you have to have a passion? What would you have to have a passion for in order to do this?
Well, so I think being a business geek really helps. One of the things I would say on age is I think the current generation probably have a little bit easier than I did because so many tech billionaires now are, 14. That it kind of helps. Like people aren't so fast to judge, and there's also how you dress as well. Back then, if you wanted to be young and taken seriously, you kind of had to go suited and booted. It was like a kind of minimum requirement. You couldn't, just casual out into a meeting like I prefer not to shave and not to have to wear a suit, but back then, to be taken seriously, you really had to kind of out-adult the adults in order to be taken seriously. So I think you guys have a few advantages, and in that respect. And there's a much lower barrier to entry for business now as well. It's much easier to get started and to do stuff. But then, that brings its own challenges. I think the great opportunity that you have right now is the fact that, owner-managed businesses, which is what I deal with. So owner-managed businesses tend to be owned and operated by the baby boomer generation, and they're dropping like flies or retiring or getting back into nappies for the adult variety. Basically, there's a huge opportunity to mop up all of those businesses that are looking for succession. They're looking for a safe pair of hands. They're not readily sellable businesses. They tend to be in the blue collar kind of areas. So things like engineering businesses and maintenance companies and things like this, but they're, profitable, debt-free, well-run, well-established, loyal client bases. All of that kind of stuff. So I think being young now has some advantages over back then. But yeah, being taken seriously was always an issue. And when I look at that first deal that I did, I think in a way I was quite lucky to pull it off. But pulling it off was kind of the social proof I needed that it was possible. And whenever I'm talking to people about these kind of strategies, I do focus on the importance of breaking your deal virginity, getting that first deal done, because it's just really, really important. So back to your question on the skills and the attributes, I think because we're dealing with owner managers, it's about building empathy and rapport. I think those are probably bigger skills than finance and legal, because effectively it's positioning yourself as that safe pair of hands for their legacy, for their business they spent years building. They're not going to get a lot of money for these businesses because of the sector they're in and the size they are. So the one thing that you can give them is some legacy and some, keeping some key staff that they want to look after, or keeping a brand name or something like that. So sometimes those types of things can be infinitely more powerful than the cash component.
Yeah, and it's that's what you call motivated buyers, right? It's buyers that want to sell not just for the money, but they have other motivations as well that you can accommodate to get a better deal for both of you. So that's how you're able to, through different deal structures, get a company for very little money, or even sometimes no money upfront at all, or just £1.
Yeah, absolutely. It's finding the itch and scratching it. So, by the way, there are deals that you buy for £1. There are businesses that you buy for £1. And they tend to be the distressed end of the spectrum. So you'll buy a business that needs some turning around or some work doing. The rest of them you buy no money down. There might be £1 up front, which is the consideration to create a legal contract with the target that you're acquiring. Because as you know, in a legal contract, you have to have some kind of payment to make it binding. So £1 is just a simple minimum amount. But there's normally something they get out of it in the future, whether that's some shares when you sell it again, whether it's some deferred payment or something else later on. But basically, a lot of the more solvent deals, the bigger transactions, like the last deal I did that was no money down was 92 million in revenue and 10 million of profit. So with 200 staff. So it's not a small business, but I'm buying it no money down. Of course, that doesn't mean they don't get anything. It just means that I don't put any money down up front, and neither do I have to raise money or borrow money in order to close that kind of transaction. So it's about understanding the itch and scratching the itch more than it is, raising money or borrowing money to do deals.
So in that sense, actually the people skills and the empathy and knowing what their true motivations are is a more important skill than actually being able to run the numbers. Because you can have someone else that can look at the numbers and is a numbers geek. Because for example, me, I'm not a numbers guy, but I think this topic is really interesting. And I already know at some point I'm going to buy a business. I'm going to acquire something, whether that's for passive cash flow or wealth building or to merge with my company.
Yeah. Listen, there's a couple of points in that. I mean, one of them is, I think buying is a really sensible thing. Look, on the entrepreneurial ladder, you have startup. Now, startup is all about customer value. It's all about creating a product somebody wants, making a product that people will pay for, and building that kind of customer value. At some point, you have to step away from customer value and move up the entrepreneurial ladder. So, at some point, you have to stop with the staff and the customers part of being an entrepreneur and move on to what I call the shareholder value part of being an entrepreneur. Now, this often gets kicked around as working on your business instead of in your business. But it's this transition from being more strategic in the business, from being more operational. Now, entrepreneurs believe they can do everything and believe that everything relies on them. But in fact, they're often terrible at running businesses. They're great at, starting things and creating things. So it's quite a good idea for them to get out the way at some point in a startup, and a good strategic thing to focus on is mergers, acquisitions, joint ventures, and exits. How you create shareholder value, how you actually make yourself wealthy. And I mean, you mentioned buying a business for passive income. The other thing that I talk about quite a bit is the myth of business and passive income, because it's never really passive. You need a good global financial crisis. I mean, I've been through a few of them. You've been through one of them, I'm guessing. They can be quite disruptive to businesses that felt they were cash cows. I mean, I had a great example. I had a business, so of the over 100 deals that I've done, I bought a call center business and I kept it for 10 years because it was a cash cow. It had a 3-year contract with the world's largest insurance company that was spitting off about 250 grand a quarter in cash profit. So from my perspective, that was a keeper. I wasn't going to sell it. And then 2009 came, and the world's largest insurance company, which was my client, was AIG, and AIG went bust, and we lost the whole business, and the business collapsed. The reason I didn't sell that business is because it had a 3-year contract with the world's largest insurance company. And the reason I should have sold that business is because it had a 3-year contract with the world's largest insurance company. So if I had sold it, I would have created a capital event. That capital event would be, money in my bank account that could then be deployed in what I would classify as real passive income, assets that generate income while you're asleep, that don't require tweaks in sales and marketing, don't require staff and customers. There's lots of ways to do that. There's things like bonds and high dividend paying stocks and real estate investment trusts and master limited partnerships and things like that, which you can be really well diversified across, that can give you a really decent income. And that income really does come in while you sleep. It doesn't need any tweaks or changes. And I think that's probably the biggest lesson I've taken at my age. I'm now, 45 years old. Instead of, I think in my early entrepreneurial years, I wanted to focus on the big exit. Let's get this thing to 50 million or 100 million. And then so I think everyone talks about billions now, but back then it was, let's get to 50 million or 100 million and then sell, have the big one. And I kind of equate that to the same kind of mindset people have around retirement, which is let's keep working until I'm too fucking old to be able to do anything, and then stop working and try and do everything I've always wanted to do. It's a really dumb idea, and I don't know why anybody thinks that's a good idea. And Tim Ferriss kind of summed it up with his mini retirements, these sabbaticals where he goes off and does stuff every 3-4 years. And I think that's an awesome way to look at retirement. But why not look at wealth in the same way? Why not, instead of focusing on this big, massive, mythical exit, which may or may not happen and may or may not happen in time, why not take multiple small capital events along the journey that create this passive income, liberate you and financially, and empower you to go off and have fun and do things? I can live in different countries and I can travel first class everywhere and I can buy nice things because I've had all these mini capital events. I'm not stuck in the day job of running a business and dealing with staff and customers every day. But I did that quite late in my career. You know, I was empire building before that. I used to buy everything and keep it. And you know, I guess I was just one good financial crisis away from becoming a bit more selfish with the capital events and trying to make sure that you kind of line your own nest a little bit along the way.
Yeah. So with that crash that's inevitably coming at some point, do you believe it's a good time to then buy businesses, or even
all the time is a good time to buy businesses? The key thing when you're buying a business is to focus on what I call asymmetric risk. So basically cover your downside. Make sure, you know, you mentioned how important the numbers are. Yes, the numbers are important, but actually if you protect your downside, the numbers become less important. You can fuck up a bit on a deal if you can't lose money on it. So, you know, when you're setting that tightrope, if you give someone 300 grand, your tightrope's quite high. You lose 300 grand if you fall off it. If you pay someone $1, then your tightrope's only a few inches off the ground. So if you fall off it, it's not going to hurt. So you can have a really good run at that tightrope. And the upside is exponential. The good thing about business deals versus property deals is property's quite inelastic in valuation. So it's kind of got a fairly fixed, demonstrable price. Whereas business, I can prove a business is worth nothing today, and I can prove it's worth millions tomorrow using exactly the same numbers and metrics. So it's got so much more. It's like an infinite canvas to paint on when it comes to deal structuring and doing stuff. So I just love that kind of fluidity that you get with business versus other kind of assets.
Yeah, I mean, I've sold my business last year, and I'm sitting on a pile of cash, and I don't have cash flow, and that's a big learning lesson of mine. It's cash flow is
the massive lesson I have is private wealth banking. So basically $3 million and up, you get invited to private wealth banking. So people like Julius Baer, UBS, Credit Suisse, these guys, and you can deploy cash with them in quite a safe way that generates a huge amount of income. So across my portfolio at the moment, I probably get about 20% return on my capital as income every year in quite a safely deployed way. And the great thing is that if I want to borrow money, they will lend me up to 70% of whatever my invested portfolio with them is at 0.7% a year. So to put this in context, I'm in Europe at the moment, and I just bought a Maserati. Well, I didn't just, it was about 2 months ago, bought a Maserati Levante to drive around for the summer, and I'll sell it again in September when I go back to Singapore. I calculated the cost of owning that car for the 4 months that I'm here as 180 euros.
Wow.
So I get a Maserati Levante for 4 months for 180 euros cost of capital. I bought a 43-foot azimuth yacht on using this Lombard facility. I basically just offered people half what they were asking for yachts, and eventually did a deal with someone, not quite at half, but at a deep discount. And then as soon as I bought it, I put it back on the market for sale at the full price. So it was kind of like give money to the impatient and sell it to the patient. You know, it's like that kind of thing. So I had this yacht for 2 years. It cost me $4,000 for 2 years. So half a million euro yacht in Mallorca, and then I sold it for a profit at the end of that period as well.
Wow.
This private wealth banking just opens so many doors you wouldn't believe exist. I'll be happy to introduce you to my bank manager if you want to have a chat with him. But literally, you know, that the whole conspiracy that the rich get richer and the poor stay poor, it's not a conspiracy, it's fucking true. Literally, it's not fair what you get offered as a rich person versus what you get offered as a civilian.
So it's called private wealth banking, and you need
private wealth banking. Yeah, you
need at least 3 million for that.
Yeah, so they normally say 10 million, but the reality is you can join with 3, and that's US dollars. The reality is you can join with 3, and you can kind of build up once you start with 3, you can obviously get to 10 a lot quicker. So because of the way they operate. So, but yeah, literally like $1 million deployed gives you 200 grand a year pretty safely, of income. You can get more than that if you want to be a bit more aggressive. But obviously, the way markets are at the moment and the way everything is at the moment, you probably don't want to be too aggressive with your investments. But it's unbelievable. It almost sounds like kind of too good to be true. I know, but yeah, I can easily walk you through it.
Is that something that's similar to capital warehousing?
I'm not sure what that is, actually. I've come across that expression.
Yeah, it might be something very similar, but it's also something about, something where you can put your money and you can take it out for low rates. And I'm not too educated on that, but it sounds a bit similar. So it might be something to look up as
Yeah,
well.
I mean the great thing, private wealth banking, it's just not available to people. They're really, really strict about getting people on board. It's just they don't advertise what they do. They don't talk about what they do. In fact, I sat down with the CEO of Julius Baer, which is the third largest Swiss bank, and said, why do people bank with you? And all of the answers he gave me had nothing to do with actually what their kind of USP is. The shit that you can do with them that you just can't do with other banks is why people bank with them. But interestingly, I took a bunch of my Harbour Club delegates to the bank, and we had a presentation from a few different people at the bank. And they said it's kind of the first time that they've ever given a presentation where they didn't have to have oxygen and wheelchairs. It's normally these like super old, super wealthy people tend to be their clients. It's like, we were quite young and dynamic by their standards.
Wow, that's really interesting. That's a really good nugget that you shared there. So thanks for that. I'm definitely going to look into that. It sounds really exclusive. So I like that. Not anymore after this podcast. So,
well, no, I tell people about it all the time. And particularly in the UK, because in the UK, everybody just goes to property. I've made some money, I'll buy another house, or I'll buy another apartment. And so you end up with an investment portfolio that's like 90% property, which is, huge exposure to one asset class. It's an asset class that has, pretty consistent habit of diving every so often when you least expect it. And people tend to be quite over leveraged in that asset as well. So they tend to borrow quite a bit of money in order to do those deals. So it can be quite a toxic mix. So it's always good to have it as part of your portfolio, but not to the kind of extent that people in the UK seem to do.
Interesting. Definitely something to look into. And this all sounds, what you do, buying and selling businesses, looking at a lot of deals, it sounds like a full-time thing. So it's not something that you could do on the side if you currently have a business. I mean, that's where...
Well, if you currently have a business, look, the best way to grow your business is through acquisition. The first thing you need to do is make yourself non-executive in your own business. So you need to find somebody that's going to run the business on a day-to-day basis. And my solution to everything in life, whatever it is to buy a company. So I would say the best way to succession plan, if you want somebody that's good at running a business that looks like yours, find someone that's running a business that looks like yours and buy them or merge with them. So you get them running the two businesses together. You can then become non-executive. You can move to shareholder value, and you can concentrate on growing your business either by acquisition or finding a buyer for the whole thing, and you sell it with that guy running it to the eventual person. You have that capital event that then liberates you. So if you have a business, you should be looking at M&A as a way to grow your business or as a way to succession plan for sure. Actually, buying businesses, I would say, from a work perspective, it's feast and famine. So you can be there's certain habits that you have to have all the time ongoing, which would generate your inbound inquiries and the people that you can do deals with. I guess I likened the purchase process to a sales process. Well, the sourcing is kind of like marketing. So if you consider it like marketing activity you would do in a business, you don't spend all day marketing, but maybe half an hour to an hour a day or half an hour to an hour a week dedicated to some kind of marketing activity will generate those inbound inquiries that you can then deal with. And basically what you'll find is that you kiss a whole bunch of frogs, and then all of a sudden you get kind of a live one, and then you're super fucking busy for a while. So basically, it's feast or famine. You have a lot of time on your hands. It can get pretty boring sometimes. But when you do deals, it's 6 and 7 figure outcomes, so they're kind of life changing. And being a business geek really helps. Just being genuinely fascinated by business and how it works and how people make money and how they solve certain problems, I think is a really useful trait to have, because then you are just genuinely interested when somebody's explaining their business to you. And so you're not focused on the deal, you're actually just passionate about business and you want to know how it all works.
And having started with 14, selling, what were you selling again when you were 14?
Watches and jewelry.
Yeah, jewelry. That's usually a good sign that you're a business geek, that there's something in you that just likes to be entrepreneurial. Yeah.
Yeah, I think it was from a young age, and also it kind of helped. Both my parents were self-employed, so I think that kind of just sets a path for you. That I think if you just go through if your parents both have jobs and you go to school, you kind of figure, okay, I can go into like public service or private sector work, and they're your kind of two choices. Whereas I think having entrepreneurial parents makes you go, or I can do what the fuck I want. It's like door number three, which and I just think in a lot of people they don't find that door for some time, whereas for me it was always there, and it was always the most appealing option, like, so hang on, there's an option where I just do what I want. Yeah, I'm I'm taking that one.
Yeah, nice. I like that. So yeah, you mentioned deal flow, really important. I think your strategy, to peek behind the curtain for you, is that you have the Harbour Club, something that
Yep.
I probably mentioned in the intro and also in the outro. And is that where is the back end strategy of that there you get a lot of deal flow from students?
Yeah, it's kind of accidental. So I started the Harbour Club in 2009 to get rid of people that kept asking me to do consulting for them, or to be a non-exec on their board or something like this. It was like I was busy buying and selling businesses, and people were noticing that their competitors were disappearing for not much money. And they wanted to do that too. So they would try and employ me to do it. And I just couldn't think of anything more fucking stupid than working for someone and helping them buy a business for £1. If I found a business for £1, I just want to buy it myself, So I struggled to know what to do with these guys. And then I bought a seminar company. So I actually bought a company that does business seminars, and I watched it and I went, that's the solution. So I just started doing a seminar. And initially I just did it as a way, like I say, to get rid of these people and to get some money from them. It was like, hey, I can trade my experience and my knowledge for some money, and everybody's happy. It's a much better way than going to work for them. And then what I noticed, I started that in 2009, well, it was like late 2008, but in 2009, I did 12 deals, and like 10 of them came from joint ventures with people that had done the Harbour Club. And I just thought, fuck, this is the answer. This is like, stop treating it like a training business, because I was already getting stuck into training ideas, like how do we do an upsell? What do we do here? And I'm like, I hate running businesses and I hate starting businesses. So why go down the route of turning it into a business? Why not just, use it for deal flow? And what's really interesting is that, the kind of the world of deal opportunities is kind of like a pyramid. So there are shitloads of distressed companies at the bottom. There's a whole bunch of mid-tier companies that are quite good quality. And we're talking millions of businesses here. So, I do this, I do the Harbour Club in the US, UK, Singapore, and Australia. But between all of those countries, there's like 15 million businesses that would fit our profile. It's absolutely huge. You could you could do thousands of them a week, and you wouldn't even scratch the surface. So that it's a huge opportunity. But I'm really interested in companies that do $1 million or more of profit. So my bit is kind of somewhere near the pointy end of that pyramid. So basically that means there's a whole bunch of deals out there that I have no interest in doing, but I have all the skills and all the knowledge to do. So the concept is, through the Harbour Club, I teach people I teach them how to do every end of the pyramid, but I teach people exactly how to go and target those types of businesses. We have a community and an app where we support people through those acquisitions. And we're not a training company. So when you go to a normal training course, all they want to do is sell you the upsell, the next thing, the mentoring, the gold, platinum, diamond fucking package or whatever. I hate all that shit. So basically with the Harbour Club, you have one price to join. The only thing you can buy from us is a ticket to come again in the future. And you're part of a community where you get free mentoring, free masterminding, free meetups and stuff like that. The masterminding is not the blind leading the blind. It's people that have done deals helping people do deals. So again, with some of the other communities around M&A, it's a bunch of people that have done training courses on M&A but haven't got the experience, or they've done leverage buyout, which, fuck it, there's 300 books on Amazon about how to do leverage buyout. It's not a big secret. So borrow loads of money, give it to your star employee so they leave is not a great strategy in my mind. So the Harbour Club just evolved since 2009 into this kind of amazing global community of people that are out there creating, tons and tons of value, doing deals. We've taken 2 companies public. We've done over 20 reverse mergers, which is where you take companies public by pushing them into an existing listed company. We're always kind of pushing the boundaries, learning new skills and new tactics, and then sharing them with the community. So it's a really unique kind of club that people can come and join. And yeah, I'm very different to kind of anything out there. But yeah, the net result of it, I end up doing a bunch of deals with Harbour Club participants who will stumble across a deal. They'll stumble across a business that's doing several million a year in profit. If they feel they're equipped to go and do it themselves, they can go and do it themselves. But if they'd rather be, strapped to me when they jump out the airplane, then they can joint venture with me and we'll do that deal together. And I do a lot of those kind of deals. And so it's a very virtuous circle in that way.
Yeah, nice. I like that. It's actually thinking outside of the box and not just how can I monetize this seminar company, but what is in it for me on the back end. So even with this, for example, with this podcast, the main reason why I'm doing it is for networking, because I know that people are going to be listening. And I have a lot of friends who have found employees that reach out to them because they listen to their podcast and they found great employees that later on ended up, starting another business together. So I think it's definitely really interesting to look at what else is in it. And one thing that I want people to really get is that this buying businesses and merger and acquisition, this is not just for people like you who are doing this full time, buying and selling businesses, but this is for any business. So it's something that everyone needs to look into. It's the best way to grow your business.
Absolutely, you should look. The only way I know how to double your business tomorrow is an acquisition. When I did my first acquisition, we grew by a year's worth of sales in an afternoon, and you can't do that with the best marketing plan in the world. It's an absolute game changer, and it's kind of the second engine on the plane. Organic growth is one thing, but you've got to have the that extra engine if you really want to get some altitude. It was a complete game changer for me. It was an epiphany. I describe it in one of my books as like I realized you didn't have to run the marathon; you can just run the last 10 yards, and they still give you a medal. It was like a really big moment when I bought my first business, and it's quite addictive. It's kind of like people say, well, you're not really an entrepreneur because you're not creating anything. But actually, it's creative problem solving. To do a deal where you don't have to commit any cash up front is a creative solution to a problem. And basically, I guess another way to look at it is that I've just made business the product. Someone might buy and sell websites or build and sell websites. I buy and sell companies. The great thing is that I can buy them for nothing and I can sell them for 6 or 7 figures on a fairly consistent basis. And that affords me a fantastic lifestyle and an awful lot of free time. And I think that beats the shit out of staff and customers.
Definitely. So, it's also a barrier to entry because most people, they wouldn't even consider this, and they just think, oh no, it's too big of a deal for me. There's so much I need to learn. What if this goes wrong? But if you do it right, like you said, you can double your business overnight by making a smart acquisition, and you have one less competitor.
And it's really understanding that asymmetric risk aspect. It's all about how to de-risk on the way in. And this is where a lot of people fuck up. So they have their existing business and they just go and try and buy something. And they normally borrow a load of money. Like I say, when you do leverage buyout, you borrow money and you give it to the star employee for them to leave. When you have somebody that's running an entrepreneurial business, they're normally doing the job of 3 people for the salary of half a person. And then you give them a bunch of money and you tell them to fuck off. And all of a sudden you're left with a full-time job trying to keep this thing on track. So it's making sure that you de-risk on the way in and making sure that the business has that depth of resource, or your business has the depth of resource to take over the operations, and that you don't do it with borrowing, and you do it in a way that means that if it all turns to rat shit, you don't lose anything apart from a bit of time, maybe some pride, but you can basically walk away from it. And that's easy to do. The legal structures all exist to be able to do this very simply. You just have to educate yourself on the hows.
Yeah, and the listener might think, oh, okay, this sounds like a lot of work, sounds like a part-time job. But I just want to give another example of someone that connected us, Adam Tucker. He connected us, and we were chatting, and he was like, I need to find a good marketer. I need to find someone that is, and have the systems. So he's actually looking into buying a marketing agency now, or just considering that as an idea, because you don't just get the people that are running the systems, but also the systems. And instead of just hiring a marketer and building all the systems yourself, you can have that as a pre-packaged product, so to speak. So you've bought another business and you have the service for free pretty much. Yeah. And then it's also exactly. Not to do it.
I mean, there's that initial blood, sweat, and years that goes into a startup that you never get back. You know, there's 2 to 3 years where you're just pushing shit uphill. And with an M&A transaction, you get rid of that whole. You know, how many three? You know, when you're young, maybe you think, I've got lots of 3 years ahead of me. But if you can circumvent those 3-year steps, it's so much better. And you've already got customers, you've already got revenue. You know, even if you want to do something different, maybe you've got some amazing digital marketing idea. Buying an existing marketing agency and then injecting that idea into it surely is better than trying to start from scratch and find people and premises and a logo and a brand and a website and all that shit. You know, it was great fun at the time. And I think a startup is a rite of passage. I think you have to do it, you know, to get it, get the experience and get it out of your system and feel that buzz that you get from doing it. But if you do it again, I think you're a fucking masochist.
Yeah, I like that idea. Yeah, and I'm the same. I've built my first business, and now I'm realizing, okay, I hate running businesses, and I hate sitting in front of a laptop and doing the menial stuff. I'm an extrovert. I like to interact with people. I believe I'm good with people skills, and I would like to be able to bring the different resources together, bring the people together that can implement it. So I definitely wanted to ask you, because you are part of the club. You also don't like running businesses. How do you find the right people? And for example, a CEO or a really key person that takes over a company or a part of the company.
Yeah. So whenever I have a business that's mine, I normally succession plan through merger. So merging with another company to get the management team in that can run the business. But the other thing is, in all my businesses, I try to behave like a shareholder. So instead of trying to constantly get operationally involved in stuff, more focus on what the outcomes are and what the plan is to get to those outcomes, and view it like that. And actually, I'm not very actively involved in any of my businesses. Even the Harbour Club, which is quite a big business now in its own right, I pretty much turn up and speak. So the Harbour Club team deals with the marketing, it fills the rooms. They sometimes send me a list of content that they would quite like me to record, either on audio or video or something like that I'll send back to them. But apart from that, I pretty much just turn up and speak, and then participate in the community, because obviously participating in the community is more my day job, which is doing deals. So I'm really, really hands off in that business, and give people an awful lot of latitude as to what they do there. And then the M&A business, the private equity company, Unity Group, we're taking companies public and we're doing deals, but I really focus on the doing deals end of that. So I see my job as sourcing and acquiring the companies that will go into the public companies that we're listing. But I don't get that involved in the operational day-to-day bit of it. I'm more of a shareholder than a manager.
So when you buy a business or you merge with a business, then you take over the stuff from that business, and they're already running themselves.
Mm-hmm. My goal, exactly. And my goal is to not be a holder of those shares for very long. So when we talk about the distressed M&A in Harbour Club, we normally have a 4-month time horizon from entry to exit. So we want to buy it, and 4 months later we want to sell it. Now that's an ideal. It doesn't always work, and sometimes you end up stuck with them for 9 to 12 months. But that's the goal, basically. The rebalancing of the company, the financial engineering stuff, is basically a 100-day plan, and then after that you're selling. It's the idea is to hold it for as little time as possible. Now, of course, that's how we teach it on the Harbour Club. What people then go and do is entirely up to them. So some people use it to sell their own business, or to financially re-engineer their own business, or to acquire a competitor. So they might use it for different reasons. But the concept is you buy and you sell in a relatively short space of time, create those capital events.
And you also don't take care. Let's say someone leaves their job in one of those companies and it's a key person. You also don't take care of that. You have someone that then hires someone new to put in that position.
Well, so again, if it was like the CEO or somebody that was really instrumental in that business, then I would look to merge it with another company in the same sector to give the management control that way. So you just become a shareholder in something bigger.
Wow. Okay. So when you said that you solve every problem by Buying another company and merging it with another company, you actually mean it.
I really do, yeah. If it, like, give me anything, divorce, wars, anything, I'll find a way to buy a company and solve the problem.
Yeah, that's your one skill, right? That's your.
Well, it's funny. I sat around with a group of friends. We were on a yacht actually in Mallorca, and one of them was a digital marketing guy. One of them was a seminar guy, and me. And pretty much whatever problem you could come up with, this guy would build a squeeze page and do Google ads. This guy would fill a room full of people and pitch them, and I'd go buy a company. I mean, like any problem you could think of, we all have our one size fits all solution to that problem, and people just have that go-to thing that they do. So, and that's the wonderful thing about business. There's no right or wrongs. There's only opinions, and there's only people's experiences of what works. And the fascinating thing about business is that nothing really does work in the way that you expect it to. So you do need to learn from experience. It's not something, it doesn't follow logic. In fact, I often joke the day I knew the most about business was the day I started, because you're so convinced you know how everything fucking works until you try stuff and it doesn't work. And then that's your real education, is just realizing how fucking difficult it is.
Yeah. One more thing that was on my mind that I wanted to ask you was that you said you have to lose your deal virginity if you're getting started in this. So it's just about, okay, kind of like doing it for the first time. So how would you actually go about helping someone get started? For example, let's say you recently had an exit, you have 300K in the bank, and you want to put that somewhere. You want to put that into index funds or whatever, but maybe you also want to buy a business to have something on the side that brings you more cash flow.
For a start, never stick money into a business. So do not stick that 300 grand anywhere near a business, or it'll be the fool and his money are easily parted. You know, that whole thing. So
Gotcha.
the funds should be invested in something that generates real passive income. So not something where you have to go and fix toilets or employ people or do marketing or anything like that. So forget the 300 grand bit, but definitely go try and buy a business. And the easiest way is go and buy and then sell a business and create another capital event, create another 300 grand, but without all the blood, sweat and years that went into creating the first 300 grand. So that would be my first bit of advice. And the challenge is, I think people have a paradigm in their mind that you have to pay to buy a business. And so the first thing you have to do is you have to break that paradigm, because otherwise you can't really move forwards. And the best way to do that is by doing a deal. Once you've done a deal, you will just have that confidence and that ability and that reference point, because whether you subconsciously or consciously reference that deal, you'll find it coming up in conversations in the future. So once you've done that deal, it makes it so much easier to do the second deal. And I know it sounds facetious to say that the catalyst to doing your second deal is doing your first deal, because of course, chronologically you have to do the first one first, but it really is. I mean, literally once there's so many, virginity is such a good analogy actually, because once you've done it once, you do it loads of times in quite a short space of time after that. So you get kind of deal promiscuous. The other thing that's very similar to breaking your virginity is the first one isn't always exactly what you targeted. It wasn't necessarily, you might set out to buy a business that looks like this and it has all these attributes, but you end up doing a deal that's a kind of a little bit off-piste over here. But that's not a bad thing, because that's the catalyst to doing the second one, which might be a bit more like what you were expecting. So getting that first deal done is really, really important. And so therefore, what I try and encourage people to do is to try and create a path of least resistance to doing that first deal. And the easiest way to do that is, if you're a consultant or if you deliver some sort of service for someone, why not take a sweat equity stake in a business, for delivering some kind of value? So whether that's a 20%, 30% stake in a business in exchange for doing something. So instead of charging for consultancy, take equity for consultancy. And then basically sell, once you've added that value, sell the whole business. So you get your 30% share, they get the other 70%. We actually have a strategy on the Harbour Club that's really sexy for doing this, which in most cases, when you do this, you end up selling your 30% back to the original owner. And we have a really neat little structure for doing that. So effectively you can get in 3 to 4 months of fixing stuff and then sell it back to the owner for kind of 6 figures for that stake. So it's that would be, and also when you're doing this, you can also do a risk reversal. So you can say, look, I'm going to take a 20-30% stake. I'm going to solve this, and this problem for you. And then we're going to sell the thing together, or you can buy me out, using the fact that the company is now profitable. It will be easier for you to, borrow money to buy me out effectively. And and you can say, and if I haven't achieved X, Y, and Z by this period of time, you can buy the 30% back off me for a dollar. So you risk nothing. There's only upside. Try and make it as win-win as possible and as least resistance as possible, and just get that dirty little simple deal done. Once you've done that first one, you'll just have so much more confidence than going into something bigger or more complex, or buying a whole company or whatever it is. And then the other thing, I guess, is without blowing my own trumpet, is get educated on the topic. Learn as much as you can about the subject. We push tons and tons of free content out all the time. If you get on our autoresponder, I think we've got like 2 years of content we'll keep pumping at you. There's tons of stuff that you can learn. We have a free report on our website you can download. That gives you some sourcing ideas and some deal structures that you can use. So there's a lot of stuff that we put out there. Just try and learn the topic, go and have a go. I mean, I started literally just banging my head against the wall. I did it without doing any education or the Harbour Club or anything like that. But fuck me, I would have liked to have done the Harbour Club 20 years ago.
Yeah, and you would have bought it probably.
No, I don't think so. Yeah, it's a lot of mistakes have gone into the education program. So.
Yeah. And I've got the report that you talked about that you can get on your website, and it's really good. There's a lot of stuff in there, and I sat down for an afternoon and went through it and took notes, and I can definitely recommend that for people to check it out. They want to know more. What do you think, how many deals you should be looking at for your first deal? Not to look at too many to overthink stuff, but also not to go for the first one and fall in love. And also, how big do you think that deal should be? Could it be really small, so you just help your mindset, so you don't feel like you're missing anything?
Yeah, the target we tend to go for. So we tend to go for more than 500,000 in revenue, just because then it's a real business. It's not like a one-man band or one customer or one staff member centric. So 500,000 and up is a really good plan. Above about 5 million in revenue, it starts to get a little bit competitive with other potential buyers. So kind of 500,000 to 5 million is pretty virgin. There's not really anybody else in there. When you talk to them, of course, they'll say they've got 15 people trying to buy them right now for cash. But they're all liars. There are literally no buyers out there. You will be the only game in town in 9 out of 10 situations. But they will, of course, tell you that everybody wants to buy them, but it's bollocks. 500,000 to 5 million is a good kind of range. As a beginner, expect to have about 20 meetings before you get a deal done. These would be qualified face-to-face, kind of good, or over Zoom, good quality companies that have a problem that needs to be solved. But yeah, expect when you get better to maybe hitting 1 in 10, but 1 in 20 as a beginner. You should be able to turn into a deal. And if you can't turn it into a deal, there will basically be a part of the process that you're getting stuck at. In the Harbour Club, we run through a process, and there's normally one place where everybody, as a beginner, tends to find they hit a bit of traffic. So what we normally recommend in those scenarios is that they partner up with somebody that complements that particular skill set, just to, again, break that deal virginity and get that first deal done. And then they can learn from that other person how they deal with that aspect of the transaction, and then hopefully be able to go solo in the future when they've got a bit more confidence. It's about mastering that kind of process from start to finish.
Interesting. All right. I definitely recommend people check out the report that you have on your website to get some more information, learn more about you, who you are. And you do an event twice a year, or?
Yeah, so we do a couple in Singapore every year. We do 4 in the UK, and we do 3 in the US every year. And next year we're doing the first one in Sydney, Australia. We've had quite a few Australians. We've had quite a few Australians come to Singapore and do it, and we've had a few deals in Australia, so it kind of makes sense to build a bit of a community there, because a lot of the value in the Harbour Club is having people to play with. And that works best when there's other people in the area.
Nice. Wow. So it's a lot of events. People can.
It's not too bad. It's we do them at weekends, so it takes up one working day, the Friday, and then it's a 3-day course. So at the moment, I give up maybe 9-10 days a year to do Harbour Clubs.
Yeah, nice. So people can check that out as well. Are there any other places where people can check out more about what you do, or reach out to you?
Yeah, they can look Twitter, Jeremy J Harbour, or on LinkedIn, Jeremy Harbour, or obviously the website harbourclubevents.com, or harbourclubusa.com, and it's Harbour spelled the English way, so Harbour. Yeah, like I say, there's tons of free content. You can download the free report there. I think just googling around, you'll find lots of stuff as well. So there's lots of articles in various places, Forbes and Inc. and Entrepreneur and all the usual suspects. That you can go and read with different ideas about the whole sector.
Well, this has been really insightful. I've learned a lot, and I think the listeners have as well. And yeah, thank you so much for coming on.
No problem. Great to meet you. Thank you very much.
Thank you. Thank you so much for listening, and I hope you got something valuable out of it. Also, let me know what you think in the comments. And if you like this and you want to see more, then make sure you subscribe and also hit that bell notification to be notified when a new video comes out. And we're looking for more high-performing, established business owners in our group. So that's why you should check out the description as well and apply to join our group. It's 100% for free. We look for self-aware, self-developed, established business owners that are high performers and that are interesting and would add value to our group. We have weekly calls where we help each other out and just chat and have a bunch of fun. So if that sounds interesting to you, then just check out the link in the description below, and I'll see you on there.